This is Matthew Cratter from Trader University, and today I want to talk about how to do covered calls on Bitcoin, how to write covered calls or sell covered calls on Bitcoin. If you're interested in learning how to make money in both bull and bear markets, or you just want to see what I'm trading, be sure to hit that subscribe button. So the way you do this is, at least in the US, I haven't figured out a way to do this outside the US. I'm a US resident. You basically open up an account with LedgerX, LedgerX.com. Open to all US residents. It looks like there's no minimum account size. So you just open up an account. The next step would be to deposit either US dollars or Bitcoin into the account. So you can click right here where it says deposit. You can send over some Bitcoin. Maybe you've already bought some on Coinbase, or you can send over a fraction of a Bitcoin, or you can deposit US dollars from your bank. I haven't done this yet. I'm not actually going to be doing this trade with real money, simply because the one thing I don't like about covered calls is that you give away your upside. If Bitcoin goes up a lot, as I expect it to do, I expect it to be trading in the hundreds of thousands of dollars per Bitcoin in the coming year and a half. And so I don't want to give away that upside, but I want to show you how to do this because a lot of you have been asking this. So you start off, you have to deposit some Bitcoin or deposit US dollars. Obviously, if you deposit Bitcoin in here, it's going to be much faster. It looks like you get credited after just one confirmation. Actually, after 6 confirmations on the Bitcoin network. So that could be definitely in under an hour. So once you have the Bitcoin here, then that's sort of your underlying collateral that you're going to use to sell options against. So after you have Bitcoin in here, well, let's say you deposit US dollars instead. In that case, what you're going to do is you're just going to buy some Bitcoin and use that as your sort of underlying base for selling covered calls. Now, the LedgerX does things a little bit differently. They allow you to purchase fractional Bitcoin in the form of what they call mini contracts. I'm not completely sure what are backing these. They look to me like they're Bitcoin swaps. They look to me also that they're holding some real Bitcoin, so I can't really tell you what is behind these. But assuming this is a regulated exchange, I assume everything goes okay. The one problem with this is you are holding your Bitcoin on an exchange, and as such, it can be hacked, just so you should know about that. That's another reason I don't really like this trade. But as you're going to see, the possible returns from this are quite large, especially if you're skeptical that Bitcoin could go up a lot. So basically down here, we can see that you can buy one mini contract, which is equal to 1/100th of a Bitcoin. Right now, as I'm recording this, Bitcoin is at 9,261, and so one contract will cost $92.61. So this is a sort of trade. It's definitely risky. This is not investment advice. This is the kind of trade that's really open to everyone if you have $92 in your account. Now, a full Bitcoin will be 100. I'm going to be doing everything in terms of a single Bitcoin, but you should know if you have less money than $9,259, which would be a full Bitcoin at this point, you can do a fractional version of this. And this is nice. This really opens it up to the retail trader. So first step, you either deposit Bitcoin or you deposit US dollars, and then you buy a number of Bitcoin using this tab here, the Bitcoin tab. Now let's say that you've already bought 100 mini contracts, or you've deposited one full Bitcoin. At that point, you're all set to sell covered calls against your position. So you can click now on options. We're going to be looking at basically on the left here, you have calls. This is very standard for options. On the right, you have puts. Now, these are calls and puts rather than being on a stock. Many of you have done covered calls on stocks. These are calls and puts on Bitcoin itself, or perhaps more technically, calls and puts on the LedgerX mini contracts on Bitcoin. So we're getting very meta here. I prefer Bitcoin itself. I like to hold it on a hardware wallet, but this is, if you want to sell covered calls, this is how you do it. So if we scroll down here, you can see that there are different months, different expirations. July 31st. The next one down is August 28th. Basically monthly options expiring close to the end of the month. Now, these are European options, and so no actions take place in terms of settlement or expiration until that day of expiration. We'll talk a little bit about that more in a minute. So we're going to be looking at the September 25th, 2020 calls. In the middle here, we can see the strike price. So we have different, let's just scroll down a little bit more here. we have different strike prices. We'll be focusing on the 10,000 strike price. You have the open interest, the number of contracts that are open, both buyers and sellers, again at the strike price. And then you have the bid price, which is currently at 800. The ask price or the offer currently at 903. You'll see these are moving around. I'm going to be using a snapshot of numbers from a little bit earlier. You should know that this is a fairly wide bid-ask spread. This is still a new market. On the other hand, when you see the returns that are possible, I think you'll be amazed by the percentage returns. It just shows you why this is such a fertile asset. So we're going to be looking at selling. Let's say we own a Bitcoin now. We've deposited a Bitcoin or we bought 100 mini contracts. We're going to be looking at selling the September 25th, 2020, 10,000 strike calls. And so we'll be basically, if Bitcoin's trading at roughly 9,200 right here, we'll be selling the next strike up. This is typically how you do covered calls. You do them sort of at the money if there's a strike available. In this case, there's only a 9,000 strike and a 10,000 strike. So we'll be using the strike price that's just above the price of Bitcoin. Now, the specifications for Bitcoin, I'll link to this in the description notes below. Each contract, call or put, represents basically covers one mini contract, so it's equal to 1/100th of a Bitcoin. Minimum price fluctuation $1, and we can see here that they expire on that date. So what did we say? September 25th. They expire at 4 p.m. Eastern Standard Time in the U.S. And then the actual settlement, the closing of the trade and sort of settling accounts on both sides, happens 1 hour later. Block minimum 1 contract. And as we said, these are European contracts. So the Bitcoin cannot be called away from you earlier than at expiration. So you can trade into it, you can trade out of it, but you're not going to have to worry about the Bitcoin being called away from you if it's trading above 10,000. So let's talk a little bit more about how this works. So as we said, we'll buy 100 mini Bitcoin contracts. We're just going to use these numbers that I have here. We're going to buy it at 9,200 roughly, which is roughly where it's trading. When I set this up, this is where the September calls were trading. They're actually trading at 794 right now. They're about there at 799. So we are going to sell, because we own 100 mini contracts, which is equal to 1 Bitcoin. We are going to sell 100 calls against that. As we said, we're going to use the September 25th expiration, and the strike price is 10,000. So how does this work? Well, we buy the Bitcoin, or we deposit the Bitcoin, we sell the calls, we get to collect $794. Let's just go here and make sure that this is correct. So if we want to actually place this trade, we'll just click right here on the bid. We normally use sell to the bid. Now it says there are 500 contracts available. So if we put in 100 contracts right here, we can see that we're collecting $799. Very high implied volatility. You can see 64% here. 500 contracts available. Now you can adjust your price. You can do somewhere between the bid and the ask price, though this is a relatively new market. So if you really want to get it done, you should probably sell to the bid. We might be able to get a little bit of price improvement here. Maybe we'll take it up to 810, get to collect a little bit more premium. So that is obviously a decision you'll have to make. But in this case, we sold right to the bid. We collected $794. We sold 100 September 10,000 calls. And so what happens? What are the different trade scenarios for this? Well, if Bitcoin is below 10,000, below that strike price at expiration on September 25th, 2020, those calls will expire worthless. They'll be out of the money. And so in that case, we'll get to keep our Bitcoin, and we'll also get to keep our premium that we collected. The calls expire worthless. We were basically short calls. They expired worthless. We get to keep the premium. In that case, we basically invested $9,200. We collected $794. I'm ignoring commissions for the sake of this, but I believe their commissions are fairly low. So we collect $794 on a base of $9,200. We just divide one into the other. That gives us an 8.63% return in just 81 days, which is roughly 39% annualized. Now, this is a very large return. It shows that we're probably taking some big risks. It shows that Bitcoin's a new a new asset class. And just so to put this in context, right now you can make about, if you're lucky, you make about 1% in a savings account over a year. The S&P has traditionally returned around 10% a year. So here you are making almost the entire S&P 500 return in just 81 days, obviously having a different risk exposure. So that's what happens if Bitcoin is below 10,000 at expiration. Now what happens if Bitcoin is above 10,000 at expiration? If it's right at 10,000, I'm not exactly sure what happens if it gets pinned right there, but I think the call would still expire worthless. So I should say if Bitcoin is at or below. You can call LedgerX and check on this. It's very unlikely it's going to close right at 10,000 at expiration. Sometimes things get pinned, but if Bitcoin, as we'll see in this trade, we don't really care where Bitcoin ends up because it makes money in most scenarios. Now, if Bitcoin is above 10,000 at expiration, your Bitcoin is sold. On September 25th, the options are exercised by the person who's long the call options, you're short the call options, and so your Bitcoin is called away from you because you were a short seller. You sold those calls. And so you will get paid $10,000 for your one Bitcoin. Let's see if that's the most you'll get paid, even if Bitcoin is at 20,000, you'll get paid 10,000 because you basically gave away the right to have your Bitcoin taken away from you at 10,000. So your Bitcoin, this isn't the worst thing in the world because you paid 9,200 for your Bitcoin. It's being taken away from you at 10,000. You still get to keep the $794 premium. And so what have you made? Well, you've made $800 on your Bitcoin. It went from 9,200 to 10,000. You get to keep your $794 premium. So you basically made $1,594 on an investment of just $9,200 in 81 days. And if you just divide 1,594 into divide it by 9,200, you'll get 17%. So this is even better. You obviously, in a covered call, your maximum profit happens if the underlying is above that strike price of the call you sold. Now, what happens if Bitcoin falls? Well, in that case, you're really no worse than if you just held Bitcoin outright. Basically, you collected $794 in premium, $794. You paid $9,200 for your Bitcoin, and so your break-even price is $8,406. So if Bitcoin falls, is still anywhere above $8,406. You have still made money at 8,406. You're sort of break-even on the trade. And so the nice thing about covered calls is if you're worried, you really want to do this if you think the underlying is going to go sideways. It's not going to go up a lot. It's not going to go down a lot. But what this does, it essentially effectively lowers your cost basis. So instead of having paid $9,200 all in, you've basically paid $8,406 all in. So that's how you would do covered calls. Now I'm going to show you how to do a cash secured put, which is really, if I were doing this trade, how I would do it. It's a little bit more elegant. If Bitcoin is currently at 9,200, we are going to sell the out of the money puts. So if we go over here, we'll cancel out of this and say Bitcoin's still at 9,200. We will take a look at the 9,000 puts, and again, puts are on this side, so we will be selling to the bid. It looks like the bid right now is 825. When I set this trade up on the sheet, it was a little bit different. It was a little bit higher. So basically, we will sell. In this case, you just need to have cash in your account. You need to have $9,000 in order to buy the Bitcoin. If it gets put to you, we're going to be selling puts, we're going to be short puts, and so there's a chance at expiration that we will be forced to buy Bitcoin at 9,000. Now you can sell just one put. We're going to sell 100 puts so that it's equal to the equivalent of one Bitcoin. Now, when I set this up, if you sell 100 puts, you could collect $1,190. Right now, it looks like it's dropped to $825 simply because Bitcoin has rallied a little bit. These numbers will move around, but in order to do this, you need to make sure you have that $9,000, and then you just sell the 100 You sell 100 of the puts. That's equal to 1 Bitcoin. Again, you collect $1,190. Now what happens if Bitcoin is above 9,000 at expiration? The puts will expire worthless. They'll expire out of the money, and you'll get to just pocket that premium. Now this is quite attractive. You can see that you've made, if you just take 1190 divided by 9,000, which was the strike price, the price at which you would need to buy the puts, that gives you a 13% roughly, 13% return in just 81 days. Now, if Bitcoin is below 9,000 at expiration, you're going to be forced to buy Bitcoin at 9,000. Now, this is okay because you've also already collected some premium. And so at options expiration, when these puts expire, if Bitcoin is below 9,000, you'll buy Bitcoin at $9,000. Then 9,000 US dollars in your account will disappear. They'll be replaced by 1 Bitcoin. And your break-even price will essentially be the price you paid for Bitcoin minus that premium you collected up front. So 9,000 minus 1190. And so in this case, you're really protected all the way down to 78.10. You start to lose money if Bitcoin is below 78.10 at expiration. If you found this video helpful, you should check out my course, Follow My Cryptocurrency Investments, where you'll get to actually see inside of my account, watch me trade, watch me buy Bitcoin. I'm mostly not trading it, but I also have some great strategies in there. For example, how to profit from Bitcoin futures, contango. But you'll get to see inside my account. You'll get to see when I'm buying Bitcoin. And if I decide to add more cryptocurrencies to my account in the future, you'll get to see that as well. Right now, I only like Bitcoin, so you'll see that these investment updates primarily cover Bitcoin. So if this interests you, click in the description notes below. I'll also give you access to all 13 of my courses. If you're interested in learning how to swing trade or day trade stocks, how to trade options on stocks or futures, how to swing trade with options, you'll also get access to my course on how to make money with IPOs, as well as my list of favorite momentum stocks. You get all of this for one low monthly tuition payment. So if you're interested, you can click on the description notes below and it will take you to this page. You can click on any of these blocks and it'll give you the list of lectures for the course. And if you find this something that you'd like to take, you can scroll down and click Get It Now, which will take you to this checkout page. Now I want to give you a special coupon. Normally access is just $125 for 30 days access, no long-term contracts or anything like that. But I want to give you a coupon since we're still probably in a recession. So if you click right here where it says have a coupon code, you type in YT99, click update, and that'll take $26 off the 30-day access price. So instead of paying $125, you'll pay just $99. That'll get you access to everything on the premium website. You can watch all the courses in the first 30 days, cancel before it renews, and you won't be charged again. I'm also constantly adding new courses. I'm working right now on a new course on momentum stocks that I hope to have up in a week or so. So that's also definitely something to check out. If you found this video helpful, please be sure to hit that subscribe and like button. Let me know your questions and comments in the comment section below. If you have more questions about how Bitcoin works or how covered calls work, be sure to let me know in the comments below. And I appreciate you watching. Thanks for watching, and I'll see you in the next video.